Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Nvidia says it's now getting orders from China and ramping up sales of its H200 chips. Plus, Nvidia CEO Jensen Huang says that OpenClaw is, quote, definitely the next ChatGPT, a comment that sent Chinese AI stocks higher. And we bring you an exclusive interview with the CEO of Kalshi. That's after Arizona filed criminal charges against the prediction market platform. But first, we check in on these public markets, roiled by geopolitics, by macro events, and we keep an eye on what's happening in terms of the stock market. Nasdaq 100 is off by 0.5%. The S&P is lower after 2 straight days of gains, and this is as we see oil spiral higher, up more than 5.5%. This is a question of conflict in the Middle East that seems to be accelerating, and we're starting to see infrastructure continue to be targeted. That is, of course, spiraling concerns about oil prices. Now, all of this is an inflationary pressure on the back of PPI numbers today that show that inflationary pressure is already here in the United States. What will the Fed do later today? All eyes on macro policy at this moment. But there's also all eyes on what's happening in terms of individual stocks. And there is a macro tale at play when it comes to Nvidia and the demand for compute, and also what's happening with China. Demand signals, actually a sign off from the Chinese government at least. We're starting to see a bit more of an appetite for buying into Nvidia stocks as GTC continues. Let's just get more context on the market moves and what's happening with Nvidia. Bloomberg Carmen Reinecke joins us. Look, Nvidia is one of the few names that pushes to the green today alongside the likes of Micron and others. Carmen, how is Nvidia able to shake off what for the rest of the market is angst about the Middle East and inflation?
Yeah, I mean, it really seems like investors are getting a little bit more confident with Nvidia here. I think that Jensen has said a lot during this conference that hopefully, making people feel a little bit more confident. I mean, the orders from China is very positive. It's something that investors have been looking for a long time from Nvidia. And he also said yesterday that they're looking at a very, large number to go into buybacks and the dividend for Nvidia. So I think these are all things that are positive and are maybe helping the stock sort of shake off some of those macro pressures that we're seeing really weigh down the rest of the market.
What has been extraordinary is that $1 trillion figure initially said didn't spur any absolute buying. But then he's trying to articulate that 1 trillion can then be added to other new products that are coming to the market is well likely to inject upside to that number.
Yeah, exactly. And I think that upside is really important. He did clarify very specifically that that doesn't include, the new products that are coming out. So, a lot of the positivity, I think, is baked into the stock, but that potential for future growth, which is what everybody, expects from Nvidia, but wants to see even more of, is really positive here, especially when we're seeing a backdrop that has so much uncertainty for the rest of the market. And, Nvidia is still the biggest stock in the S&P 500. So seeing it go up when sort of the rest of the market goes down is significant, because if you're selling the S&P, you're also selling a lot of Nvidia.
He just, of course, speaks in big numbers, talking about how computing demand has increased by 1 million times in the last 2 years. But he's pushing forward on where next for compute, and that's going to be driven by Agentic AI. Look, you saw his adoption of this ChatGPT moment for OpenClaw really helping Chinese names. Is it going to have a read across to the US?
That's something we're definitely looking for. And I mean, I guess it sort of remains to be seen. We know that, what Nvidia does definitely moves, stocks of other companies that are related. And we see that on a global scale. So, we've seen through GTC, companies that have partnerships with Nvidia get some investor confidence or some buying into their stock. I see no reason why we wouldn't see more buying into certain U.S. companies sort of based on this news and, going forward there.
I've already seen certain analysts trying to talk about the companies that will be benefited by Claw, OpenClaw, the Claw 6. We'll see if that catches on. Bloomberg's Carmen Reinecke. Thank you very much indeed. Now, Nvidia CEO Jensen Huang was indeed articulating this projection for $1 trillion plus in AI chip sales, and the fact that, of course, it doesn't include other product offerings. Now, we've already got the signal of the upside. Bloomberg Intelligence noting that this reinforces confidence in AI demand through 2027 and Nvidia's market leadership. Let's get more on that with Kim Forrest, CIO of Boca Capital Partners. Look, we're used to Jensen Huang being optimistic. Are you buying into it, Kim?
Kind of, sort of. I mean, he really is the poster child of AI build out, right? And for the longest time, until this GTC, we've all made the assumption that this is going to happen at large data centers, and that is who the company was serving. Probably the hidden gem in his comments were that only 60% of the chips that they're selling right now are going towards those large data centers. But then corporations who are trying to figure out maybe developing some in-house uses of this are now buying their products. And I think that's really interesting and kind of takes a little pressure off of the company, because it isn't solely dependent on, what CoreWeave and Microsoft and, the rest of the gang are buying.
Perhaps it's not just about GPUs, CPUs, even LPUs. It's actually about the software side. And how much did you pay attention to OpenClaw, for example, the way in which it seems as though Jensen Huang's trying to get in on the enterprise desire to have safe agentic AI?
Right. And I talk to a lot of people in my job, and I have heard more and more companies rolling out agentic services for their employees, making them more productive. Now, what the spending on that is going to be, it's anyone's guess. I am going to point back to the .com era, which it wasn't just about pets.com and stamps.com and all that kind of goofy stuff, but rolled into that was the Y2K conversion that a lot of companies were undergoing. And one of the flaws in thinking by investors during that time was that spending was going to go on in perpetuity. What companies were spending on IT for that Y2K conversion was thought to, it will bloom and blossom into other areas, and it didn't happen. And I think this is a warning for this technology as well. I've seen some really goofy estimates that, companies are going to be spending on this, in perpetuity in the trillions. And that's really not how technology works. People want an end to it, and they just want to use the build out, and they just want to use the technology for productivity. So investors beware.
Well, how therefore should the warnings to investors be about, in perpetuity, the pricing of memory going ever higher? At the moment, we seem to be getting endless calls that this is going to be at least until maybe 2030, but there's got to be demand destruction, and that's going to be focused on in Micron's numbers after the bell.
Exactly. And Micron is a really great example of this, right? Because they had been participating in an, I love to say this word, oligopoly of about 6 companies that were making NAND and DRAM memory, right? And what would happen was somebody would bring on a new supply, and that would just kill NAND prices because it was kind of a commodity. Well, even though high bandwidth memory is, a gating factor now for a lot of these AI build-outs, at some point, we're going to go back into that boom-bust cycle, even though it's exotic and in demand. So I think that Micron just announced that they're adding capacity to a Taiwan plant, and look for the other players in this area to start doing that as well. And again, it's not going to go upwards to the right like it has been, the demand or the pricing, because we're going to have supply demand here entering into this. And these are even a smaller oligopoly of about 3 players right now that are making this high bandwidth memory.
How much of these stopped pricing in already the enthusiasm here, Kim? Because we're seeing Micron rally into its numbers. Are people already expecting just killer results? And what more can the CEO really talk about?
Absolutely. I mean, they are expecting killer results, but the physical world is going to impact their results too, because you can only ship what you make. And they are running up, everybody in this industry is running up against, supply problems. And you can see that as the chip builders are complaining about it. So I am very enthusiastic about Micron for the long haul. I think they're a great company. But in the short term, I wonder, can they ship enough to satisfy investors' demand? And I guess tonight we'll see.
We've also seen perhaps a slight quietening of the anxiety around the AI trade, just from a, can we afford it? Will it really come? Do we need this level of data center build out? perspective, Kim, where is the anxiety right now for you when it comes to the still optimism we see baked into the stock market?
Sure. Well, I have some real questions about how much capacity is needed. While I'm a huge bull on AI, I understand what it can do. I am not still convinced that large language models are the way forward forever and ever. Amen. I think they've done wonderful things in solving natural language processing, but I don't know that that is what we're going to do in, let's say, 5 years. So my fear still is that we are building, our investors are building their expectations on what they know today. And I think things can change very, very quickly with innovations like, I don't know, OpenClaw or whatever it is, where I'm sure where companies are using less processing power and getting more bang for the buck.
Unpredictability in the stock market, that's exactly what Howard Marks was calling out today when it comes to AI. Kim Forrest, CIO of Boca Capital Partners, great to have some time with you. Now, coming up, we're going to be speaking with Tarek Mansour, Kalshi CEO and co-founder. That's after Arizona filed criminal charges against the prediction market platform. More next. This is Bloomberg Tech. Arizona has filed criminal charges against Kalshi, accusing the company of operating an illegal gambling business. Bloomberg's Tim Stanovic joins us now with Kalshi co-founder and CEO. Tim, take it away.
Hey, we're joined by Tarek Mansour. He's the CEO and co-founder of Kalshi. Tarek, good to see you. Thanks for joining us on this. Look, even though other state regulators have taken steps to crack down on what they say is unlicensed betting on Kalshi's site, Arizona appears to be the first to escalate to criminal charges. What is your response to these charges?
Look, I mean, these charges have nothing to do with gambling or the merits. If it was about gambling or the merits, they would let the judicial process run its course in the federal courts. 5 days ago on Thursday, Kalshi filed suit against Arizona in federal courts on the merits, on whether Kalshi is subject to exclusive jurisdiction of the CFTC. We're confident in our position and wanted to let the court process play out. And instead of letting that happen, the Arizona Attorney General decided to subvert the judicial process and weaponize it and go to state court and file these criminal charges, which we view as meritless and baseless. We see this as a total overstep, and we look forward to fighting it in court.
Well, experts are saying this could be the first of many charges such as these from other states too. How does it change your legal strategy?
Well, this is the whole point of federal preemption. So this is not about gambling. The charges that the Attorney General filed are not about gambling. They're not even about sports only. They're about prediction markets writ large. It's just, attacking the entire business model. And nothing prevents from the same Attorney General or others from filing the same criminal charges against derivatives markets writ large. They could file the same exact charges under the same analysis against CME or ICE or NASDAQ. And that's the whole point of federal regulation of these financial exchanges, is to prevent this sort of chaos and these sort of attacks on these businesses that could be political in nature or other. And that's a very important distinction.
Well, I read the charging document from the Attorney General. It has 20 charges. They're mostly about betting and wagering when it comes to sports. There's some election stuff in there. Would you ever consider limiting your business in Arizona or other states to things that these AGs don't seem to have problems with, like economic data, the price of Bitcoin, what markets are going to do, predictions around those things?
Look, I mean, the AG also claimed that we have war markets. Which is incorrect. It's either flat out a lie or it's misinformed take, which is unfortunate for someone that's, filing criminal charges against the company. What's more important here, again, is this is not about the merits. If it's about the merits, let's let the judicial process run its course in federal courts. This is about something other than the merits, which is what I'm focused on. I don't know what the AG is focused on, but, she is up for re-election. They did some press. It does seem to be making some buzz. But what I'm really focused on is building a great product for our millions of customers, out of which close to 400,000 are in Arizona, and fighting any of these baseless cases in courts, which we're going to continue doing.
So you're fighting the cases. As I mentioned, Arizona is not the only state to take issue with your business. What happens ultimately if courts do side with states? What does it mean for the future of your company?
We believe in the rule of law, right? We will always abide by court decisions. The law applies to us, but it also applies to the government, including state governments. And that's a very important thing, right? This is really not about our business model. Again, if it was about our business model, we would be focused on the federal courts and the lawsuit about the merits. This is a broader attack, and many states have sided with us and have granted us a preliminary injunction agreeing with our legal analysis. We have spent 4 years getting regulated by the federal government, and we have a federal government in the CFTC that is coming strongly in favor of our position. Filing these charges is a total overstep and an overreach from an AG that's up for re-election. And we find that unfortunate, but we will stay focused on what we do best, which is building a great product.
So certainly the CFTC, we know where the CFTC stands, and we know where Mike Selig stands on this. We don't know where courts stand on this. And I'm wondering if we see a state like Nevada, for example, block access to your business, what will you do? Will you continue to operate, or will you say, okay, we're not going to operate in Nevada?
Well, first of all, let's get to that point, and we'll have to make a decision as a company what we do. What I can reiterate is we will 100% abide by the law. That's what we will do as a company. It's always been our position. That's why we spent 4 years getting regulated up front, regulatory first as a company, and always abide by the law. But what I always say, the law applies to us as much as it applies to the government. And when government oversteps the law and goes out of bound, we're going to fight that in court, which we look forward to.
How long does that process take? Because it seems like there's a regulatory limbo happening. It's almost like your legal team is going to have to play whack-a-mole with all these states that are filing suit or bringing criminal charges. How long is this going to take?
And gladly, we have a legal team to handle these types of things, and that's what they're going to be focused on. And maybe it's a question for them. I mean, look, whatever long it takes, we're going to fight for prediction markets. I spent 8 years building this company, half of which are getting regulated up front. I really believe in this marketplace. I'm very excited about the growth that we're seeing. It's one of the fastest growing companies in America right now. And so what I'm going to be focused on is keep building a great product. And that's what's sort of most important for me. The more important sort of question is, when it comes to, this is not really about, whether this is gambling or not. It's not really about state versus federal, which are both coexisting and both growing, both models. This really is turning into sort of some special interest that, like the status quo. The status quo is working very well for monopolies, but not for the consumers that are flocking to prediction markets right now, which we're going to keep fighting for.
Tarek, there is this perception, though, that people think this is gambling. An Ipsos survey from just a few weeks ago, for example, shows 61% of adults say prediction market trading is closer to gambling. 8% say it's closer to investing. So there is this public perception that doesn't necessarily match with what you say the platform is. How do you respond to that, and how do you battle that? Like, how is this not gambling?
I haven't really looked at these polls. The thing I will say is there's always been a battle of whether financial derivatives are gambling. Grain futures were called gambling in the 1800s, and there was a Supreme Court decision that said even though there is speculation, these products have are structured as the financial markets, and thus are going to fall under financial market jurisdiction. So I always say this: whether something feels and looks like gambling doesn't necessarily make it gambling. Speculation exists in all financial markets. If we're going to take a line that speculation is gambling, then the stock market with retail participation is gambling. Then buying options for retail or zero-day expiry options is gambling. Then retail buying crypto is gambling. The more important line, and the historical line that we've been taking under the law, but also as we think about it societally, is the business model a gambling business model, which is a model where the revenue of the business and the profits are equal to the customer's losses, in which case the incentive is to promote more losses and block the winners? Or is it an open, free, and fair marketplace where people can enter in and out freely and transparently, which is a financial exchange in which Kalshi falls under?
Tarek Mansour, Kalshi co-founder and CEO. Tarek, always good to speak with you. Thanks so much for joining us. Caroline, back to you.
Fantastic interview, Tim. Thanks for bringing it. Now, coming up, the US government defends its blacklisting of Anthropic. Details next. This is Bloomberg Tech. The Trump administration is dialing up efforts to oust Anthropic from all federal agencies, saying the US government has reason to question whether the AI firm is a trusted partner after the company asked for limits on how its technology was used by the Department of Defense. Let's get the latest on this saga. Bloomberg's AI reporter Rachel Metz. This is now not just in the public court of the media, this is going to the actual court for a fight out.
Yeah, so as part of this fight between Anthropic and the federal government, Anthropic has filed 2 lawsuits, and the one in California has a lot of action happening. Yesterday, the federal government said, we are going to fight. We think that Anthropic's technology became an unacceptable risk, essentially, to the military because Anthropic would not agree with a change to its contract that the military wanted earlier this year.
Emil Michael, he's the US Undersecretary of Defense for Research and Engineering, and has really sort of been the public voice of this. And he's talking about how there was hostility thrown around by Anthropic during the negotiations, he feels. And their fear, it seems to be, is that in some way the technology can be manipulated. If it remains within federal use, Anthropic, if it feels its red lines across, could just go in there and change the way in which the technology works. Is there going to be grounds for this, Rachel, as a legal argument?
I mean, I think that is really alarming sounding, right? Like the idea that if you could be using technology in a warfighting situation, and then the company that has built the technology could do something about it. For Anthropic's part, they said in a statement, Dario Amodei, Anthropic CEO, said in a statement in February, the company has never done something like that. And really what the company wants is just some specific limits on how its technology is deployed, while the military is saying we want to be able to use that technology for any lawful purpose, something that Anthropic, it alleges, refused to accept due to its usage policies for Claude.
Really, they're talking about their long-standing commitment to harnessing AI to protect our national security, is what Anthropic's saying. How is this affecting, or could affect, the business briefly, Rachel?
It sort of could affect it in 2 different ways. On the one hand, this has seemed to be a huge boost for Anthropic, especially as a consumer product, which typically it is not thought of as a consumer product. It's chatbot Claude, but the app has gotten extremely popular, big boost in popularity. And at the same time, the company says this could be hundreds of millions or even billions of dollars in damage. And it cited in a court filing last week some specific ways that it's already starting to harm the company financially.
Rachel Metz on the latest with Anthropic and the Pentagon. We appreciate it. Now, coming up, we'll speak to the former GitHub boss about the latest fundraise for his current company, Expo, and the market for offensive cybersecurity. This is Bloomberg Tech. Welcome back to Bloomberg Tech. We check in on these markets, which in many ways are in the eye of a geopolitical storm, a macro storm. We're off by 0.5% on the Nasdaq 100. More broadly, stocks have turned lower and the S&P 500 because Brent crude is on the higher side, more than 5% higher. Look, the conflict with the Middle East, within the Middle East, seems to be, well, worsening rather than coming to any near conclusion. We're currently seeing, therefore, inflationary pressure be the key concern for the market. PPI readings coming in today showing that there's inflationary pressure even before the conflict erupted some 19 days ago. And we look towards what the Federal Reserve will do in response. That meeting today, we're not expecting any change in rates, but certainly a conversation to be had with the Fed chair. Let's move on and have a look at what tech stocks are doing, because in amongst Nasdaq 100, which is down, we're actually seeing Nvidia trying to do its best in the green. We're up 0.3%. Now, this is as we have some extraordinary dictations coming from the CEO, Jensen Huang, who's talking about this moment in OpenClaw, the fact that we've got a new ChatGPT on our hands in the world of agentic AI. It is driving, those words driving Chinese stocks in particular. Minimax up almost 20% as they release new agentic AI tools for its user base. GPU is up almost 20% as well. Look, these are record highs at the moment due to OpenClaw frenzy that has beset the entire Chinese world alike. Look, let's stick more broadly with Chinese stocks, because another giant that has been betting on the use of OpenClaw style agents is Tencent, which actually just released its earnings results showing the company plans to at least double its investments in AI in 2026. Pleased to say, here in New York for the time being is Bloomberg's Asia stocks reporter. It's Yukyung Lee. Great to have you here for a couple of months. Yukyung, Talk to us a little bit about Tencent and what they said on the numbers.
Yeah, I think there are three key takeaways from their earnings this morning. I think number one is this top line growth. It said 13% sales growth for the December quarter, which is its fifth straight quarterly results. It was posting double-digit growth, and that was in line with expectation thanks to its advertisement and gaming department. So I think that's the first key takeaway. And the secondly, and more importantly, is this AI investment. The company said it's going to double its AI investment, and that's going to cause some share buyback. So companies going to scale back the share buyback so we can bankroll the AI investment that's going to at least double this year. And I think thirdly, third takeaway is actually the company's mention of the OpenClaw. The company mentioned how it's going to use OpenClaw and how it's going to help the company's AI strategy using the OpenClaw. So the company's CEO Pony Ma said OpenClaw is actually an inspiration, great inspiration for the company's WeChat-related ecosystem. And it also said it's helping Tencent leverage its cloud computing. So the mention of the OpenClaw, top-line growth, is doubling of the AI investment. These are the key takeaways from this Tencent earning this morning.
It's so fascinating because here OpenClaw is sort of a developer phenomenon, but in China and Asia, it's a consumer phenomenon. This desire to see agentic AI, autonomous agents used in your personal life. How are other giants like Alibaba thinking about this as we look towards their earnings coming out?
Yeah, absolutely. So Alibaba is reporting their earnings on Thursday before the market U.S. time. I think there are several things that investors are looking forward to. I think number one is investment plan and the monetization plan for its artificial intelligence. Overnight, we heard from Alibaba that it's going to hike the prices of its own AI storage and computing products by as much as 34%. And investors cheered the news, sending the stocks up as much as 4% in Hong Kong on Wednesday. So investors have been looking for answers on how the company is going to monetize the AI investment and justify the massive investment they are spending on the AI. So that's more details on this AI monetization plan is definitely going to on the minds of investors during the Alibaba's earnings conference call, as well as plans on investment on other areas such as quick commerce. The company has been spending a lot to catch up with rivals, and also definitely a continued growth. The investor will be looking for signs of continued growth in its top line and bottom line.
Yokyung, I'm so pleased you're going to be sticking around for a few months. We appreciate you joining. Yokyung Lee over from Asia here in New York, talking all about Alibaba and Tencent. Look, now let's pivot a bit to the private markets. Cybersecurity startup Expo has raised $120 million at a valuation of more than $1 billion. Now, the round was led by DFJ Growth and North Zone and comes as more companies are focusing on the threats of AI-powered cyber attacks. Pleased to speak with Expo CEO Uge Damore. Uge, I mean, talk to us about, first and foremost, the money, what you use it for, how you continue to power Expo growth.
Thank you very much for having me. You cannot defend against machine speed attacks with human speed tools. And that is what Expo is all about. Last year, we proved that completely autonomous attacks are possible by entering our bot on the HackerOne platform. And within a few months, it became the top hacker in the world. After that, we quickly signed up over 100 corporate customers, and we're now raising this money in order to better serve those customers and to very quickly further develop our product and go to market.
Okay, so what's so fascinating about your tool is that basically agentic AI is a force in terms of our defensive posture, but it's also a force in terms of our aggressive posture, the fact that people can fight back, and you're using, in many ways, the ability to find vulnerabilities ahead of bad actors. How are we seeing cyber attacks more broadly scale in this moment? How much is there an aggression from those that are wanting to do ill?
Absolutely. So attackers will and are already using AI. But the good news is that defenders can do it too. By thinking like an attacker, our agentic AI system can find the flaws before the bad guys do. So the danger is not really AI itself, but the danger is defending modern systems with yesterday's tools.
Talk to us about what we're seeing in terms of you beefing up the ability to scale. Is it about people? Because many in this moment might say, well, with the rise of agentic AI, you need less talent. You just can empower the talent you already have.
It's both. It's absolutely. We already have some of the very best human hackers in the world working for us, as well as a fantastic go-to-market team. Really, we've got the combination of both AI talent and security engineers. However, we also need to bring the product to market, and the go-to-market effort is still very much a human-led activity. A lot of the money will also go, candidly, towards inference in order to speed up our development.
Where are you looking for that sort of compute? How are you managing to ensure you've got the right inference power when you need it?
So we actually work with all the frontier labs. All of them give us special access to early models, and that allows us to always be in front of the very latest development. We also, of course, as pretty large consumers, have special deals with the large hyperscalers.
Okay. You are so fascinating. Expo's clearly fascinating, but your background as a computer scientist professor at Oxford decades, the fact that you helped build GitHub, Copilot as well. When we see this fervor around Agentic AI, when you see the hype that's happening worldwide around an OpenClaw and an open source model that can revolutionize personal AI, how does that make you feel? How real do you feel this moment is?
It's an unbelievable time to be building. We're in the middle of a new revolution akin to the industrial revolution of previous century, but it's going to be much bigger than that. So personally, I actually feel deeply privileged to be part of this transformation.
So briefly, you're optimistic at this moment, rather than any concerns, worries, security issues? Absolutely.
So the key about agentic AI systems is that they will actually amplify what we can do as humans, and that's certainly true in cybersecurity. We've got one of our customers, Seznam, sometimes called the Google of the Czech Republic. They've been using our system for over a year. And one quote from one of their engineers stuck with me. Every Expo agent is like a new team member. In security, we're vastly constrained by the scarcity of talent. And so having the ability to suddenly scale and do all the things that we know we should be doing, but we're not able to do before, that's fantastic. And I believe that the same is true in many other fields of human activity.
Ugo Damore, great to have some time with you. Expo CEO on the fundraise. Coming up, we're going to speak with Gradient general partner, Darren Shirazi. That says the company raises $220 million for its fifth round, or its fifth fund, in fact. This is Bloomberg Tech. Gradient Ventures, well, it's raised $220 million for its fifth fund, doubling down on its strategy of backing the next wave of AI founders at seed stage, early stage. Now, with its latest raise, the firm now manages almost $1.2 billion across its funds. Pleased to say that we're joined by Darren Shirazi. He's Gradient general partner. And so, do we move away from any of the learned performance already, or do you double down on the conviction that you already have? Is it still about generative AI and the tooling?
Thanks for having me. Yeah, I mean, we have been investing in AI since the very beginning. And our focus has really been partnering with founders at the earliest stages, when founders are really starting out with a brand new idea. And we've backed hundreds of companies, and we've been fortunate enough to partner with these companies from the very beginning, some of which are in an apartment or are founders that have never even been in business before. And our focus is on helping them scale up and really find the next round of funding, and to really partner with these founders all the way through IPO in some cases.
I mean, you've been doing this since 2017, since before ChatGPT, since before AI got cool, dare we say it. You've backed, 500 AI founders already. Talk us through the wins that you've already seen, because, look, the LPs need convincing at this moment. Where were you able to show your prowess to those to come back and reinvest with you?
Yeah, I mean, I think over the course of the last 10 years that we've been investing in AI, we've seen the number of companies that come through our doors really accelerate and increase. We used to see about 100 companies in AI per year, and we were sort of the oddball venture fund that was really, really niche and looking at really technical people that were researchers or people that were not necessarily focused on building big businesses in the eyes of a lot of other venture capitalists. But we saw that the ChatGPT moment was going to come. We saw that the Transformer paper, which came out a month before Gradient launched, was really going to be the epoch moment for AI. And my partner Zach and I, we saw that the ability for people to use these models as sort of an intelligent buddy or an intelligent co-pilot was really going to be the future of the internet and the future of technology. And we partnered with these founders. Now we see 2,000 companies a year come through our doors and pitch us with some new AI technology or AI capability. And we have to pick about 10 to 15 of those that we decide to partner with. So the job has gotten more difficult in terms of volume, but it's also gotten a lot more interesting because of the number of technologies and number of founders that we see and what they are working on. Everything from wafer scale compute companies to OpenClaw renditions or individual models that are for specific tasks.
What's also got more difficult is just the size of the rounds. Look, we've just had the biggest sort of seed round. What was it, $1 billion that Jan LeCun's just been raising over in Europe? I mean, coming out with $3 billion in terms of valuation. You're seeing Mira Marathi raise an extraordinary fund. People are calling these like mango seeds or avocado seeds, as Ed loves to say. How can you compete?
So that's a really interesting question, is that we actually think that there is a bubble in certain parts of AI. There is a bubble in foundational model companies, contenders to OpenAI, contenders to Google, contenders to xAI and Anthropic. And those are companies that we don't fund. What we really want to be focused on are AI infrastructure companies and AI application companies. And those seed rounds tend to be really well priced and tend to be ones that we can invest in and lead with an average $3 million check and own 10 to 15% of those companies. We actually don't see the valuation issues in the areas that we want to focus in when it comes to AI. When it comes to a lot of these other companies that are raising $1 billion here or there, it seems as though those are a lot of venture capitalists or investors that want to chase the next OpenAI. But realistically, the moat at the model layer is just capital. How much money can you raise? Because you buy data and compute. And so where we focus, the valuations are favorable and the round sizes are favorable, and we believe that that will continue.
What is it like in terms of diversifying your LP base? Because it has a very interesting story, Gradient. It came out of Google, but then you brought on external money. Does that change the way in which you have to invest? Because lots of people have different strategies, the why they're coming to you with their money.
It was extremely challenging to raise from LPs, especially in this climate. I mean, we're very fortunate that we were able to get it done in about 9 months. But, before, for our prior 4 funds, Google was the single LP, and they've been an incredible partner. I don't think we could have launched an AI seed fund in 2017 when everyone was looking at crypto without the help of Google. And so now I think we decided we wanted to diversify our LP base mainly because it gives us a lot more capabilities. We have partners in the LP base for our companies, and we also wanted the ability to sort of scale up our capital base and have that flexibility. But it was challenging because a lot of people haven't seen liquidity, especially in the institutional LP network. Fortunately, we found LPs that believed in our vision and mission and wanted to partner with us over the long term. And now we have a collection of not just Google, but many other amazing institutions, including companies like Mercado Libre, which we're very closely partnered with, as well as a number of other insurance companies, institutions, and foundations. And so I think that given the climate, it is challenging to raise, especially for a seed fund, when you have Andreessen and General Catalyst raising $10, $20 billion funds. But I think we've been able to articulate our strategy in focusing on the areas where there isn't a bubble, when valuations are favorable, and where we can partner with these founders when it's just an idea and mature and grow with them.
Love that clarity and your candor. Thanks so much, Darian Shirazi of Gradient. Congratulations on the new fund. Now coming up, Disney's new CEO takes over as the media landscape shifts, government scrutiny increases. More on that next. This is Bloomberg Tech. Disney's annual shareholder meeting is today, and it marks a leadership handoff. Josh D'Amaro set to take over as CEO from Bob Iger, and he steps in at a challenging moment, inheriting what is a bit of an underperforming stock and a media landscape still in flux. For more, Bloomberg's Chris Palmieri, who leads our media and entertainment team, joins us. Look, for the second stint of Bob Iger, he came on in November 2022, and the stock has only gone up 9% compared to 70% for the S&P, and huge moves for Netflix. What does Josh need to prove to an investor base today?
Well, DeMaro's coming from the theme park business. That's where his whole career has been. So we don't know to what extent he really understands the TV business and the film business that is still so critical to Disney. And there's just been a movement out of these stocks. The streaming businesses haven't been as profitable as people hope. The traditional TV channels are just losing viewers and advertisers. So DeMaro has to articulate a strategy for that business that we really haven't heard from him.
Yeah, I mean, he's got, of course, Dana Walden still on board when it comes to Chief Creative Officer and all things streaming, movies, that sort of IP. But he has done deals. He's got into Epic, for example. How are we likely to see him bring all of these clustered sort of assets together?
Well, what we get a sense of his strategy is that he sees, coming from the parks business, he's got that direct connection to the consumer. And so he sees the Disney Plus service as a, direct consumer service, and a way to tie in, say, the games like Fortnite, the Epic investment, and it's going to be a sort of a Disney universe. And he's going to put this all, sort of more connections directly with Disney fans who are, as we all know, rabid and money-spending consumers.
We'll see what he does with tech, AI, VR, AR, and the like. Bloomberg's Chris Palmieri watching that shareholder meeting. Thanks so much. Now, let's talk about the FCC chair, Brendan Carr. He is waging what he calls a crackdown on fake news, as the Trump administration leans more heavily on regulators to challenge media coverage, raising new questions about the FCC's role and reach. Bloomberg's Kelsey Griffiths takes a closer look at Carr himself, his rise within the administration. It's today's big take. It's a fascinating read, and it all starts with how basically a lot of Georgetown alumni were amazed to hear that apparently they'd gone to university with Brendan Carr and they didn't realize he was not a big guy on campus or a big personality before the Trump administration.
That's exactly right, Caroline. I spoke with some of Brendan Carr's former classmates who were shocked to realize in hindsight that they had even gone to university with him. And I think that is such a contrast to the man we see today who has become this flamethrower for the Trump administration. That's really in contrast to his kind of shy, quiet personality that he's had over the years. So we've really seen a change in his demeanor and the way that he communicates publicly as he's really stepped into this role as Trump's media enforcer.
Take us on that evolution then of him, the personality, the man, and the roles that he sort of almost said Gump-like got him into this place with the FCC.
So I've covered Brendan Carr since 2017 when he was a commissioner. And I think it's been really interesting to watch. He has always had a really congenial relationship with the press. Even now, he always stops by the press table at the FCC's public meetings, speaks with us, banters, and I think that is sort of in contrast to the big swings that he's been taking in the last year or so against what he and Trump like to label as the fake news.
He must have had to grow quite a thick skin. Just thinking of the fallout online, the pushback he's got from very famous comedians and the like, just how does he serve the administration agenda at this moment?
Brendan Carr has very much taken the position that whatever happens in the media, whatever fallout happens in the media, is not really his problem. I asked him what it was like to publicly contribute to Jimmy Kimmel's temporary cancellation and then to face a lot of blowback for that. And he says he doesn't really care. He tries not to pay attention to the negative headlines, and when he does see them, he kind of chuckles. So I think he kind of adopts that similar attitude that the president does, that all news is kind of good news.
Well, see if he's reading your piece too. Bloomberg's Kelsey Griffiths. It's a great deep dive and a great big take. I urge everyone to go online and take a look, and on the terminal. But that does it for this edition of Bloomberg Tech. You do not want to forget to check out our podcast. Find it on the terminal as well as online on Apple, Spotify, and iHeart. From New York, this is Bloomberg Tech.